Good morning and welcome back to Almus Market Mornings. December has begun with some build-up in the risk aversion sentiment, and what's also interesting is the sell-off in the treasuries. Yields of our major developed markets saw a jump in yesterday's trading, about 8 to 10 basis point in the 10-year papers. If you look at the specific, Japanese yields have been flying recently, while yen has seen some gains after Ueda, who is the BOJ chief, hinted at a hike in the December meeting. Precious metals have broadly held their gains from the move on Friday, with silver touching almost $59 mark in yesterday's move. Rupee also saw some weakness persisting, hitting its lifetime low once again. Good morning, JK. What's your take on yesterday's rupee moves? 90 isn't really far now. What are we expecting from here?
Good morning, Swaraj. Yeah, if you're a rupee bull, you're not going to see good time very soon. 90 is not far off, and it is not inconceivable to see it in not too distant future. In fact, rupee has been wading through several challenges, and it's not a surprise that it is making new all-time lows quite frequently. And yesterday was, of course, another one. The trade deal, which is yet to see the light of the day, dwindling trade and capital flows, and a persistent bearish sentiment resulting from all this is keeping the rupee on the weaker side. And this is notwithstanding the recent GDP data that showed highest real GDP growth since 2022. And we've had quite a few macro data in the last couple of days, and some of them are like current account deficit was lower at 1.3% of GDP compared to 2% in previous quarter. Uh, but looking at the current rate of trade deficit, it's definitely going to be higher in the coming quarter. I think the data for Q2 is not really so influential. On the contrary, if you look at the balance of payments, it recorded a deficit of 10.9 billion compared with a surplus of 18.6 billion in a year earlier. And looking at the way capital flows have been dwindling, and rather they have been on the negative side, and the high increasing trade deficit, of course, influenced by the gold and silver report, imports at record highs. We can see the BOP once again, on the negative side, and that could be another source of pressure for the rupee. Manufacturing PMI is to 56.6 in November, they revised down from initial estimates of 57.4 as per the preliminary report. And this marks the slowest improvement in operating conditions since February. Industrial production also eased to 14-month low of 0.4% compared to 4.6% in the previous month. The slowdown in industrial production, of course, is in line with the performance of the core sectors. And finally, the GST collections also fell to a 12-month low of 1.7 lakh crores in November, with the growth slowing to just 0.7%. So this is, of course, expected because of the GST rate reductions by the government. And the hope is that, with GST rate reduction, the actual volume demand will pick up, and it will make up for the fall in the GST revenues. So that is, something that we can hope for. And as also shared in yesterday's, morning podcast, the nominal GDP also coming at 8.7% compared to the 10% that is assumed in the budget is also a fiscal challenge for the government. So right now we are not able to see anything major positive for the rupee, and it's not surprising that we are where we are, and it's RBI is doing the heavy lifting just to ensure that gap between demand and supply does not push the rupee too fast or too low. But the direction is very clear until something big changes. On the global markets, perhaps there was a more clear indications from the Bank of Governor Ueda, who said that delaying a rate hike too long could cause sharp inflation and probably force them to make rapid policy adjustments. And the uncertainty which they had focused on with the US tariff impact and economic outlook have subsided significantly compared to the few months ago. So I think he also brought up there is, a research predicting that next year's wage negotiations will bring another round of strong pay hikes. So now the expectation is actually clearly swinging in favor of a rate hike in December by Japan. Uh, Whether they'll do more going forward in 2026, it's a matter of speculation right now, because the way they may do calibrated moves that they do, I think it's not so conceivable right now. Uh, so I think this statement was a trigger for yields to pick up everywhere, including, of course, Japan, Europe, and US as well, where even the weaker ISM manufacturing report did not stop the yields from rising, because yields have already been trading at their lows near 4% for 10 year. And see, manufacturing activity contracted at a much faster rate, with supply deliveries, new orders, and employment all, falling. So that's not very encouraging. But then the Japanese yields rising, and yields rising everywhere else also, push the yields higher. Of course, there are expectations that US will cut rate in December, despite the fact that there is a, more dissenters now, or the house is more divided than in recent times, and that is keeping the market little bit skeptical. But then I think possibly with influential members like John Williams indicating that there is a need for rate cut in December, one more rate cut at least. So I think market is still pricing in around 87% probability. Um, we're also looking at Powell, who is likely to speak today, but probably not, going to cover the monetary policy. But still, market will be glued on to what he is going to say. Equity markets are in a December mood. I think they are swinging both ways because of position adjustments and policy uncertainties going forward, and of course the liquidity thinning out as well in the coming days. So uh, don't see a directional move in the equity market as well. As far as the dollar is concerned, it fell against the yen after Ueda's statements, but it's also influenced by the fact that Fed is also going to cut rates. But it's all within the range. I think 155 for yen and 1.1650 for euro. They are all good resistances or support levels for the dollar, and that's holding up. I don't think we can see distinct, uh, you know, directional move for the dollar very near term. I think we may have to wait till 2026 onset, by when we should have many things clear. Perhaps one of the things is not yet focused on much is the Supreme Court dealing with the legality of Trump tariffs, and that could be one, market mover going forward as well. So I think we are in for some subdued trading overall in the global markets, but still await more data from the policymakers and also the government data, which is now started to trickle in. And as far as India is concerned, not much to deviate from the current path of depreciation for the rupee. Thank you.
Thank you, JK. And of course, a Bank of Japan rate hike, which might come in December, is a theme that we are following. So even BOJ chief, it seems they are prepping markets for a hike in December. There's only a point till which they can put out to, the rate hikes with the inflation running high. Otherwise, it risks being out of control. So yields have, in general, picked up everywhere: Japan, US, Europe, even UK. So that's one theme which we are seeing. When it comes to India, we are seeing sort of the rupee weakness persist. We saw the BOP, the overall balance of payments recorded deficit of $10.9 billion, which was in a surplus of 18-19 billion dollars in the previous year. So that's also something on the concerning front. Essentially indicates that on the capital account front also we are lacking some flows. So yeah, flows is the name of the game. Till the time we don't get any flows, I think the key challenges will remain. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.